What is going on with the economy right now? Oh my goodness, that is probably the number one question I get. Inflation, gas prices, baby formula shortages, food shortages, supply constraints. There's a lot going on and a lot of concern, understandably. In fact, it looks like all signs are pointing that we may be heading towards an economic recession here in the United States. What does that mean for real estate? That's a great question. Truth is, we've had we've had six recessions since 1980, and only two of them actually negatively impacted the real estate market. One, we reduced equity by about 2%, and the other one was 2008 to 2012, where 40, 50%, 60% in some cases equity losses over a 4-year period. I think that one obviously is the one that's fresh in our mind. So when a lot of us hear the word recession, we're thinking, 2008 all over again, which makes us think, well, maybe we should wait to buy real estate. We'll wait till prices drop and then we'll buy real estate. That's not necessarily the case. And let me tell you kind of what I'm seeing in the marketplace. Interest rates have gone up. So interest rates are between 5.2 and 6.2%, and they're kind of bouncing around a little bit, right? So just a year ago, they were at 3%. That's a huge difference. And what has that done? It's dropped the buyer pool. There's less buyers that are interested in buying right now. However, inventory is still lower than the buyer demand. So even though buyer demand has come down, inventory is still lower. So demand is still higher than the inventory. Inventory is continuing to stay low. I think there's a couple factors for that. One, sellers are a little nervous about the economy as well, so they're kind of hanging tight. Also, builders aren't able to build as fast, and remodeling and that kind of stuff can't be done as fast either because there's supply constraints. And so all of that, I think, is helping keep the inventory low. We're still we're about 20 days, 25 days of inventory pretty much in the major areas here. It bounces around a little bit, but nothing more than a month and a half, even in the more rural areas. So what does that mean for home prices? Well, what I think is going to happen, we had a ton of buyer demand and very little inventory, and that huge buyer demand was just skyrocketing prices. Now that buyer demand has come down, I think what we're going to see is the level of how fast prices are going up is going to taper down a little bit. It's going to slow down. And so what does that mean for buying and selling? Well, a couple of things. As a seller, don't panic. It's okay. It may mean that your property might take a little bit longer to sell. Might mean it might take 30 days to sell. When I got into real estate, the market was right after the crash. We used to guarantee people that we would sell their home within 90 days or no commission, which was considered very fast back then. So 30 days is still a very quick amount of time. I'm seeing some inexperienced realtors dropping the price by 50 to 100 grand after 12 days on the market. That's ridiculous. That's a panic move. And there's no need to panic. Just hang tight. There's not a lot of there's not a lot of inventory out there to compete with, and there's more buyers than there are inventory. So hang tight. As long as you're getting interest on the property, you don't need to make a panic move and do anything crazy. The other thing is I see with sellers is some agents that are inexperienced, they're listing the properties too low because they've been in the habit of doing that the last few years. They list it low and they get a bunch of offers and they feel good about it. Well, the problem is in a more balanced market, or when demand starts to slow down, it's really important that you're marketing each property to the proper buyer pool. And you can underprice a property and end up selling it inside a buyer pool that was never intended for that property. I just watched that happen on a house that I think it sold for about $100,000 under where it should have. And it's because they priced it towards that buyer pool, and that's the only interest they got. They missed the buyer pool that I think would be more appropriate for the house because they didn't price it in that price range. So hiring an experienced realtor that understands where to price your property, not too low, not too high, but just right to maximize what the market's going to yield, is going to be super important. Now, buyers, we're going to be looking for those opportunities, looking for those listings that seem out of whack and that are priced a little too low, because unlike before, where you'd be competing with 20 offers on that and it'd get blown way out of the water, you might only compete with one or two other buyers in that buyer pool, and you might get a really good deal on that property. So that is something we're going to be paying attention to. So yeah, that's it in a nutshell. As the economy continues to do its thing, it'll be interesting to watch how that affects the jobs market and all of that. But right now, we are so constrained on inventory. We're nowhere near 2 months of inventory, let alone 6, 7, 8 months of inventory where it would need to be to start really seeing a negative effect on home prices. I expect that home prices will still continue to go up, albeit slower than they have been going up. And that as people try to find their footing, sellers and buyers trying to find their footing in the shifting market, there's going to be unique opportunities for both sellers and buyers. So if you're thinking about buying or selling or investing in real estate, please give us a call. We'd love to take great care of you. If you know anybody thinking about buying or selling in real estate, we'd love to take care of them. If you have any further questions or want to take a deeper dive into some of the things that I've mentioned here today, please give us a call. We'd be happy to do that with you. So I hope this information was helpful, and have a great day.